Hello friend and welcome back to my channel, Blue Nose Trading. My name is Tori Solis and today I'm going to be sharing my bookkeeping workbook that I use in Microsoft Excel to track all of my expenses, my income for my business, and my estimated tax payments. I also track my retirement contributions. This is a book that I've been working on for several years and I've finally gotten it to the point where I feel like I can share it with others. I do want to say that this is all manual data entry. So while you can create this book yourself or you can buy it one time for me and then own it and update it, you are going to have to manually enter all of your income and expenses, and every year whenever this book it needs to be updated. So you're going to have to go into all the cells and change all of the dates, and you may have to tweak some of the sections and categories to better suit whatever you're doing. So it does take a little more work than something like QuickBooks that's going to, automatically do a lot of things for you, but you only have to buy it one time, or you can create it yourself if you feel like it. And you're going to save a lot of money in monthly expenses if you're willing to take the time to do the work to manually enter everything. So I have a clickety-clackety keyboard, so you're going to hear that a lot. And let's just get into it. I'm going to try and go over everything that this book does. I do want to say that I'm not like a tax expert. This is just how I track all of my income and expenses, and your situation can be different. There are some things that you're probably going to want to edit and change within these formulas to better suit your needs. And you should always consult a tax professional to make sure that you're doing everything correct. So let's just get into how my particular book works. So we have this whole page here. This is your analytics page. So all of your data entry for this page is going to go into this green sheet here for your income. So you'll have the date, the outlet for the sale, the amount of the sale, the type of income that you're going to put that into, the category, what item it was, the payment method that was used, and if it has sales tax or not. And then this next expenses tab, this red one here, you're going to put the date of the expense, who you spent it with at the vendor, the amount, a short description so you can keep track of that kind of stuff, and the category for the expense. And once you start inputting data onto these two pages, it is automatically going to fill out in your analytics page. So for my analytics page, I've tried to make this kind of as blank as possible, but let's go over this generally, and then we'll put some inputs onto these pages and see how it fills out. We'll just start over here. So your income type analytics, so if you sold something at a show, in this column, it's going to say show, and that's pulling from income D and C. So D is the income type, so if you put show here, and then $100, and we'll just say that it was the January 1st of this year, and we'll call that also a show for the outlet. And for the category, let's say that it was ceramics, mugs, and they paid with show, and you do have to pay sales tax. So now when we go to the analytics page, it's going to show that here we had a show. It's pulling from that page for that $100, and it's 100% of our sales because this is tracking out of this amount down here. And that's that. So wholesale is the same thing. Get the wholesale. So if it says wholesale, and then also, down here it did ceramics for the show because we did that. How did I set this up here? Oh, so let's rechange this to the payment method being Square. Okay, so that does change this to the income being Square. And there would have been Square fees. So we'll go ahead and put that in. We're just going to do this one thing at a time here. So we would have to pay square fees. I'm just going to throw out a number here and say they were $8 for our show. And we'll call it show 1. And that's going to be square fees. This is just a random number here. And we also want to change this to show 1 here, because that's going to matter later. So it's the income type is show, but the outlet was show 1. So now what we're going to see, I had this here, so just change this to show 1. So, okay, so now when we enter the show, it's showing that 100% of our incomes were from a show, and that we sold ceramics at that show, and it was art show 1. So we have show 1 here, which matches up with the show 1 here. And it calculates that our square fees were the amount of income from square divided by the amount that was spent on square fees. So it was $8 in square fees, makes it 8% that was the fee to square. You can enter the actual number. It's also going to start categorizing things over here. So square fees, $8 are the only fee we have, so that's 100%. And then, so that's the first type of income. Then we'll go to wholesale, and we'll just enter a wholesale income. And then down here, we're also tracking our wholesalers, so we'll just pretend that we sold it through fair. So we'll go here, and we'll say that on the 3rd of January, we made a sale through fair for $300, and that is wholesale. And we'll say that it was jewelry and necklaces, and the payment method was fair, and it does not have sales tax. Alright, so now we can see that we did $300 in wholesale, which is 75% now that we have this, and the total down here is this. And down here we can see that now we have, 75% in jewelry. And at Art Show 1, 100% of our sales were from that show. And for fair, 100% of our wholesale was from fair. And I've made some blank things here, so we'll just call this show 1, show 2, so that it matches. So this says show 1 here. This is just an input for you to see. But what's important is that in this formula, you have show 1 here, or whatever you're going to call the show. And that's the same thing here. So this one says art show 2. You want to make sure it says show 2 if that's what we're going to call it, and that would track the show. And for your wholesale clients, it's kind of the same thing. This is fair, so we want to make sure it says fair here. And his wholesale client, you could change the name and then also change the name here so that it pulls accurately for you. So now let's say we made a sale on our website. So we're going to say that on the 4th of January, we made a website sale for $35, and that's going to be website sales. We'll call it more ceramics. We'll say that it was a bowl, and they paid through Shopify, and we did need to pay sales tax on that transaction. So now we can see that we made a 35% sale on our website, a $35 sale on our website, and now it's 8%. It's totaling up the total here. It's also totaling up the total over here for you to see what we're doing in this quarter. And then it's also going to add that $35 into our ceramics. On our online tracking, it's adding it to our website sales. Nothing happens down here. And so, oops, gotta change this here to website. Okay. So when you sell on your website, you're also going to have a, what day did we say that was? Well, we made that sale on the 4th. So we also had some sort of fee associated with our website. So we paid our website, we'll say it was $2 for that sale, and we'll call that seller fees. And that was we'll say if we're doing Shopify, it's got Shopify fees. If your website is on Square, you'll just want to call it Square fees again and just keep it all together so that you know in total what you're paying. So in that case, it adds that $2 to Shopify. I spelled website wrong. So see, you have to be careful if something's not working to double check these formulas. So now we're seeing that it was 6.06% in fees. And these are just random numbers. Your fees may vary. You're going to have to enter your actual data. We're just kind of winging it here. So then we have consignment selling. And you could change any of these if you want to. But let's just go ahead and move to the next quarter for the sake of making this template kind of make sense. So we'll say that in April on the 1st, we had a consignment sale. And what do we call these? Have them kind of, we'll call it shop 1. So shop 1 gave us a $200 check, which was consignment, and we'll say that that was also ceramics, and that was plates. And they paid us through Zelle or a check, and we don't do sales tax on that transaction. So there are no Zelle fees, so it's not going to affect your fee tracking platform. It's just a way to kind of keep track of how you were paid. It could be check, Zelle, whatever you want to say. But now what we're seeing is that we have $200 in consignment, and that $200 came from shop 1. What's going on here? Okay, see. And this, see, so this one, it says divided by 0. Sometimes you have to check. This isn't pulling from the right source. This B12 needs to be moved down to B13 because we want to be tracking this total divided by your subtotal here. So now it's making sense. And this one looks like it's in the same situation. So that's things that can kind of happen that you have to kind of, there we go. Now it's all making sense. All right. So now let's make an Etsy sale. So we'll say that on April 6th, we made a sale through Etsy for $35. This is Etsy. It was jewelry. We'll say it was a bracelet. They paid through Etsy, and Etsy remits the sales tax, so you don't have to worry about that. So now when we go over here, we're going to see, okay, we made an Etsy sale. It's going to show that this, on our online tracking, there's an Etsy sale and the one website sale totaling up what we sold online. It's adding into the categories that we're sliding it into, and there are extra categories here, so you can change this category word to match this category word, and it will pull other categories for you. Doesn't change anything for any of this. And I like to put my Etsy fees in at the end of the month, but let's just throw them in here right here. So we pay Etsy a fee of $5, seller fees, Etsy fees. So now it's going to say, okay, that was 14% that we're paying to Etsy. So now we have like a social media kind of income. So these could be like you sell on the TikTok shop, or you can change this any way you want to make it. So let's move forward in time so that we can keep these. I want to show you how the quarterly stuff works. So we'll say that on July 1st, we made a sale. What was I doing here? Social media. We made a social media sale for, we'll say $40, social media, we'll say it was jewelry, it was a necklace, and they paid through PayPal, and we collected sales tax for that. You're going to have to look up when you need to collect sales tax. It's very specific to each individual state. Sales tax is a state thing, so we'll get more into that when we go over the sales tax bracket calculator, but that is going to be something that you're going to have to adjust, and you're going to need to know when you need to be typing yes or no into your sales tax. So now when we go over here, we can see that we made that $40 social media sale, and that it's a jewelry, so this number went up. And that they paid through PayPal, which there are also going to be PayPal fees. So we'll say for 7-1, we had to pay PayPal. We'll say $5 in seller fees, and that's PayPal fees. Pull your actual numbers. I'm really just throwing stuff out here to show you how the math on the calculator works. So now it's going to say that we paid $5 in total PayPal fees, and that it was 12.5% with the numbers, that we put in there for that. So now if you take commissions, we have another. So we'll take a commission, and we'll take that commission on August 9th. Commission for, let's say it was $100. It's a commission for ceramics, and we'll say it was dinnerware, and they paid through PayPal as well, and we had to collect sales tax for that. So now we're going to go back in here. What day was that? 8/9. And we're also going to track our PayPal fees. So we had to do a PayPal fee of, let's just say $15, seller fees, PayPal fees. So now you can see that we had commission, what did I do wrong? So see, I said commission, did I spell commission wrong? So you gotta spell stuff right. See, there's 2 M's in commission. Commission, and these are things you're gonna have to watch for, because if I'm, I use this every day, and I still have to kind of double check everything. So now it's there, and now you can see the commission was, $100, and it added into the PayPal fees here, so now the total that we've paid to PayPal is $20, and this is the percentage of that. So it's the percentage of like what we sold through PayPal divided by the fees, which is going to give us this percentage down here. And of course, since that was, more ceramics, it's going to total up what we sold in that category. Doesn't really affect anything else, but it is telling us when we're going to have estimated sales tax payments and income tax payments. We're gonna get to that after we go through this. Actually, that's the end of this. So we've entered a sample for all of these kinds of things here, and then we also have, moving down here, the online retailers. So this is where you're typing in, the income type was Etsy. Yeah, income type D, this income C. So this income type here is determining that this was Etsy or your website. And that's going to, and you can add another one here. So with this formula here, like for this one where it says website, it's the sum if the income of D is website. So that means that it's pulling from this income page, that's income, and then it's looking at bar D to see if it says website right here, which it does, so it's going to pull that information here, and it's going to total up the total of the income from bar C, which is, we go to the page income, and this is bar C. So that's how that formula is working. And it's going to tell you, which sites you're making the most on, because if you're entering it right, it's going to calculate like where your traffic is coming from. You have the option here to add additional sources by changing this source information to match the name of whatever here, and then you'll want to type into bar D that source to have it pulled to this formula here. and then it's going to make the subtotal, which is the sum of these bars, and it's going to calculate the percentage of each one by taking the sum of all of these is 100. And then this is, dividing by this total divided by the subtotal. And that's going to give you your percentage. And this is kind of just a double check thing, but you want your percentages to equal 100 to make sure that this is all mathing out correctly. So as long as these totals are summing up to 100%, then your formulas should be theoretically working correctly here. So this one is, we're taking this total and dividing it by the subtotal to get a percentage. And it's also set to conditionally format these cells based off of a color gradient for where your sales are coming from. So it gets darker green the more sales that you're making in that section. So let's just go ahead and add another income from Etsy to make this not 50-50. And we're going to put it into Q4, which is going to be sometime in October. So we'll say that on October 3rd, we made an Etsy sale for, we'll just keep it simple and say it was another $35 on Etsy. And it was ceramics this time, and it was a mug, and they paid with Etsy, and there was no sales tax. And then we would go in and we would do, what did we say, the third? 10-3, Etsy, $5 seller fees, Etsy fees. All right. And then we're going to look at that. And now you can see that we'd made more money on Etsy than our website, so this green gets darker here, and the subtotal goes up. This is still equaling 100, so all of that's still making sense. Income by category, we've been using the categories jewelry and ceramics so far, so basically this is going to be if income E is ceramics, it's going to take the total of C. So we're looking at income E, which is the category, and if it says ceramics, it's going to take the total of C and add it all up together, and that's how that formula is getting its information. And you can add different income sources here, again, by changing this category name and then changing this category within the quotation marks inside here to pull and create new data on this section here. And then consignment, if you have multiple consignment shops, for simplicity, we just called this shop 1. You could put in the name of the shop. Just make sure that when you change the name here, you're also changing the input here. That's going to come from income page on column B. It's going to total up C. So on income page column B, it says show, or what is it, consignment shop 1 here, and the income type is consignment. So that's B. It's going to total C. And then for your shows, it's the same situation here as it is for consignment. We have show 1, or you can call it like the Dallas Art Festival, or wherever you're at, whatever your show's called. You can change that here and then also change it here. And as long as that's what you've typed into column B on page income, it will total up C. So again, that's show 1 on income B will total up column C. And that's a good way to track which art shows have been your best and what percentage of each show was the percentage total for the shows. And then of course up here, it's going to show you your overall percentage. So here it shows if we only made $100 at that one, are only 12% of our total sales compared to where we had a $300 wholesale deal. That's our best income source so far. All right, so that's all of that. And there's also, change the wholesale client. Shows, wholesale. This works the same as show. It's just going to be your income B, same as these two, but you'll change the wholesaler name. So I just have an example here of fair. And, you just change this wholesale client name to whoever and change it here. It'll total up where your wholesale sales are coming from. Now let's look at these big things over here. These are just kind of some general guideline analytics to kind of keep track of stuff. This number here, this 2025 number, you just enter this from your last spreadsheet. You just type the number in. For simplicity's sake, I just typed in 1500 each quarter, and then it'll show you if you are below your year over year. So it'll be in parentheses here if you're making less year over year. And then let's go ahead and say that we'll just say that in December on the 7th, we had a crazy holiday shopping rush on our website, and somebody spent $6,000. I know that's unrealistic, but we're trying to just kind of simplify things. If you were entering a lot of little transactions, that would probably be more likely. So we'll say it was dinnerware, and they were on Shopify, and there was no sales tax. Now see how I had this little T here? That's gonna mess stuff up, so I gotta delete that. Etsy, yeah. Make sure you're spelling stuff right. If you mistype something, it's not gonna know how to pull your information, and I have no idea what a website fee would even look like for that, but we're just gonna throw out some kind of random number and say that it was, we'll say $400 in seller fees. And we'll say that that was Shopify fees. This is right. It could be anything. I mean, there's a number, but I just don't have time to do that math right now for you. Just pull your own numbers off of the data that you're getting off your receipts and stuff. So now we can see that, well, I guess that really didn't put us over for the whole quarter, but it got us a lot closer. All right, let's add one more crazy sale in December. We'll say on the 8th we got a whole, oh, that's not what we need here. We'll say that on the 8th we got a fair order that was just crazy. Somebody went bazonkers and bought $10,000 worth of wholesale, and we're probably going to be making that order through January, but let's say it was ceramics and it was just bowls. They just wanted a ton of bowls, and they paid through fair, and there's no sales tax on the wholesale order. So now when we go look at this, we can see that those two unrealistically crazy sales bumped us over for quarter 4, and now we've made more money in quarter 4 than we reported making last year. And these numbers, you have to enter these every time you start a new sheet. You're going to pull these numbers from here. So if this was the total sales for this year, when you copy this to make a new spreadsheet for your next year, you'll just copy this number and paste it into the last year's number here. So what this is doing here is it's taking the sum of the sales that are captured here on your monthly sales sheet, and then it's doing math here. It's basically just a simple subtraction. It's taking the total from last year and subtract the total, taking this year and subtracting last year to see if you come out positive or negative here. It's pretty basic stuff. This is the annual income, and that's basically that. Now this monthly sales thing, this section here is the most complicated. I put a lot into it. You're gonna have to check your formulas, and when you go to create a new spreadsheet for the year, this is going to be where you're going to want to pay the most attention. So these columns here for the current year are taking the sum of C if it is within the date range of, let's see, this is the 1st of January to the last day of January. So if we were making this for 2027 and we were copying this spreadsheet over, you'd have to come into this column and change this number to say 2027. And for every month, I always just do like the 31st, even if there isn't a 31st in that month, because it just won't capture a 31st that doesn't exist, so it doesn't really matter, and that way you're not missing any days or you have to think about it too much. So we'll put that back to 2026, but you're going to have to go in for every single one of these formulas here and change this date. So this is February, change the year when you're creating a new spreadsheet so that it captures correctly. So that's how all of these look. This is capturing January, February, March, April, May, June, July, August, September, October, November, and December. and then it's calculating just the total of all this as the sum of your annual sales. This is your revenue. So this is before you take out any expenses. This is just revenue. The same as up here. This 2025 is if you were creating a new spreadsheet, you would copy this number and paste it into your last year's number. It's just a number. There's no formulas attached to it. It's just to create an input for comparison. For simplicity's sake, I just made every single month even 5,000, but obviously that's going to look different based off the reality of your sales. So all the way down on this column, you will just enter the numbers with no formulas from the sales of the previous year, and it's just going to create a simple sum here. And then this is going to calculate, this column here is going to calculate your year-over-year profit or loss. So with the information that we've given it so far, we're under 4,565 under last year because we didn't enter a lot of inputs. We only have, said we made $435 in January. And all this is doing is another simple, this number minus this number gives you your year-over-year revenue. And, we didn't calculate any sales here, so we're completely down, 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 down. All these are down, except for that one crazy December we had where it was just wild. Somebody went crazy on fair. And you can see here that we made $11,000 more. And whenever you are making more, your income, your revenue for the month exceeds last year's revenue, the cell is going to turn green. That's a conditional formatting I have on there. I don't like red because it kind of stresses me out. I don't use it very often, so it just stays gray until you break the sales, then it's green. It's the same thing here. This is just for the annual revenue. So it's going to be this number minus this number, same thing. It'll also turn green if you break last year's annual revenue. Next, we have our expenses. So this one's a little complicated because when you're doing expenses, your business expenses do not include, depending on how you're set up. I'm set up as an LLC, just a one-member LLC. So when I pay myself, that is not an expense that I can count off of my taxes. I still have to pay my income tax on that expense. Also, when I have to change this here. Whoopsies. I'm going to fix this to make sense for everybody. Well, it'll just come fixed, but oh no, I'll fix that later. If it says IRA, I'm going to change it to retirement, and that's how it'll just come. But basically what it's saying is, it's the sum of the expenses for the month of January. Again, if you're going to change and update it for the next year, you're going to need to go in here and change this to the next year and leave the rest of it the same. But it's not including the expenses of owner's draw or retirement. So your retirement isn't an expense, and neither is the owner's draw that you're giving yourself. So let's go into our expenses and pay ourselves. Let's say that we're going to pay ourselves in January. It's going to be an owner's draw for $1,000. We're paying ourselves, and it's an owner draw. Okay. So now you can see here that this didn't add $1,000 in expenses here because that wasn't an expense. But it did come down here and add to the owner draw that we've taken out to pay ourselves. But our profit and loss is still income, revenue, minus expenses. But let's also say that in January, we're going to pay Fidelity to put $300 into our IRA. And we're going to call that retirement. Okay. So now, retirement. I didn't do this right here. Okay. Let's see, make sure I got this all right. Retirement. All right, so now what this is going to do is the retirement contribution we made in January goes down here so we can track it. And what we paid ourselves in January goes down here so we can track it. But it is not counted as expenses. And profit and loss here is just going to be revenue minus expenses. That's the profit loss. And then our estimated income after tax. Now this is a formula right here. And now I just want you to know that this is an estimation. Don't live by this. You want to double check everything and keep track of your bank account actively. But this is something I've created to kind of get a rough estimate here. So what this is doing is it's taking the sum of your expenses through the date of January, and it's excluding retirement because your retirement is an above the line item. So it's not an expense, but it's also income that you're not going to have to pay tax on if you're contributing to a tax advantage account like a traditional IRA, which might sound kind of complicated. If you're not making it doesn't matter if you're not making contributions, but if you are making contributions to a traditional IRA, that's what this is all in here for. And basically it's taking your expenses and your profit, and it's excluding the fact that you have IRA contributions, and it's multiplying that number by 0.3, which is just an estimate for what you need to pay in taxes. And this is going to give you the estimated money that you have left over after you pay those taxes. Oh, man. So the profit and loss was $425, but after taxes, it is including the fact that we did pay our retirement contribution of $300, but it didn't count it as an expense. But you want to know what you have left, roughly, after you pay that 30% in taxes. So just to show you, let's delete this, the $300 IRA contribution. See, it didn't just add $300. Now it's saying that your estimate after taxes is $297.50. And the reason that it didn't just add $300 is because that $300 is tax deductible, and it's accounting for that. So it's kind of like counting it as an expense, but it's an above the line expense. So it's giving you a tax advantage, and it's accounting for that. So let's put our $300 IRA contribution back in. And now you can see that the estimate after tax, it's accounting that we paid ourselves for that, but we're not getting taxed on the income that was used to pay the IRA, but it's also not showing up as an expense. I'm sorry if that's confusing. It took me forever to get this formula to work right, so it's just what it is. It's a rough estimate. Okay, so they all work like this, no matter as long as your dates are right for your contributions and when you're paying yourself, it's going to calculate your expenses here in that way. And when you go to update this for your next year, you will need to change the year dates for all of these to the next year. And they all basically work the same way. They have the same year dates that you'll have to change. They're just going month by month, and they're doing some math for you. Formulas do math. Who would have thought that I would have fun doing algebra? Because that's basically what this is. Now, this total here, this is just a sum of your estimate after tax here, right here on this annual line. Now, this number here is your post-tax. So this is after your taxes, your owner's draw, and your retirement contribution. So the number that it's going to come up with here is also going to include the fact that we are paying it's that number, but it's also subtracting out anything we paid in sales tax and anything that we put into our retirement contribution. So this is going to be closer to like a rough estimate of your bank account, what's left over after making those payments. So these are including all the expenses, all of your owner's draw, and all of your retirement contributions. That section is a lot, and you want to be careful with these formulas because a little tweak in the wrong direction can mess something up. And if you're going to buy this template, I always encourage you to save a backup that's blank so that you can reference those formulas and double check them. And double check my formulas. If you think something feels wrong, ask a professional. I'm not a professional, but this has been working for me. So I've been using it for several years, but double check everything. Don't just take my word for it. So now we have your state sales tax. This calculator here is just to estimate what you're going to need to pay in sales tax. Your quarter periods could look different. This is set up for Texas because that's where I'm at. You're going to have to look up all the information that you need because every state is different. So these are how our quarters work. These are our due dates in Texas. And when it's calculating what taxable sales are, it's going to be pulling from these dates. So if your quarters are changing, this one is set up to calculate from January 1st, which is the beginning of this date, to the end of March, which is the end of this due date period. So if your periods are different, you're going to have to change these dates to reflect your periods. And it's calculating if you said yes, that you collected sales tax on this sale, it is going to calculate an estimate of what you need to pay. Now, the estimated payment, where I live, sales tax is 8.25%. So this rate here is my estimated sales tax. It's going to take the total number of sales that we said were taxable, and it's going to multiply it by whatever sales tax rate, percentage rate as a decimal that you put here. So you're going to want to look up the rate that you need to be collecting and remitting and enter that number here for this formula for you. Now, this is just a tracker for you to keep track of like what payments that you made. You just enter a number. So let's say here that we paid the $11.14. Okay, so now it's just telling me, okay, this is how much I've paid, and this is how much I estimate that I'm going to have to pay in total. And you can just kind of see if these numbers, if you have a deficit or if it's looking good. You enter these manually when you make your payments on this section. And that's sales tax. And like I said, it's going to be different for every state. Mine is set up for Texas. The default template for this book is going to come set up for Texas, but you will need to look up your own rate and change that. This next one is federal income taxes. So all of your taxable sales need to be recorded, which we are recording them up here as revenue. But your taxable sales are actually going to be your revenue minus your valid expenses. We only want to account valid business expenses on this form, not what we pay for groceries. And it's going to track within these quarterly dates so that you can make quarterly estimated payments. It's going to track your sales for that date, and then it's going to, so here we have the dates. You're going to have to change the year when you make a new year. And it's also excluding what you paid in retirement. So when you contribute to your retirement account, it's going to reduce the taxable income that you have. So this is including your retirement contributions on these quarters and estimating what your estimated payment should be, including after that retirement contribution has been made, so that you're ideally not overpaying. I have this set up to where it's going to calculate all your taxable sales. So, revenue minus expenses minus retirement contributions. And it's going to multiply that by 0.3, which is 30%. This rate can be different depending on your income level and how much money you make. So you're going to want to look into it, but just as a general rule of thumb, setting aside around 30% to pay your estimated taxes is just a general good rule of thumb. But if you make a ton of money, you might have to pay more. And if you have, if you barely make any money, it might be less. But it is better safe than sorry to set aside at least this amount, and also double check how much you're making and what you should be paying so that you can change this 30% rate as needed. It's better to overpay and get a refund than to underpay, and you want to make sure that you have this money available because you do not want to be in trouble with the IRS. So double check those numbers, double check your rates for your income taxes, and see what you need to be at. I have it set at you're setting aside 30% for your estimated payments. So on these sales, it's going to say that our estimated payment is going to be $37.50 based off what we've put in so far. And this is the same as the sales tax up here. So if we make a payment for $37.50, it's going to say, okay, this is how much you've paid. And since we had that really crazy year crazy month in December with no expenses to account for it really, it's saying that, we're going to have to pay this much on this quarter. So there will be more expenses, but this is just, it's estimating the numbers based off of what we gave it. So it'll give you an annual summary of what you paid, and it will also estimate your payments. and you can manually track what you've paid so far to make sure that you've at least paid your estimated payments. Down here we have just a general profit and loss generator. It just kind of pulls numbers just for a quick look. So it's pulling your annual revenue, and then it's pulling your annual expenses, your total expenses from your expense report over here. And it is just simply subtracting one from the other and giving you your profit and loss for the year. And also I have a section here for a charitable donation. I like to donate 2% of what I have left over after pretty much everything to the SPCA of Texas. You can change that amount from 2% to whatever percentage you feel comfortable with, or you can ignore it completely. But basically what this number is accounting for is, here we have another one where I didn't type retirement yet. I was tracking it as IRA for my own personal thing, but I think that making it say retirement for the template is going to just make more sense for people so that they don't get confused. So yeah, basically it's going to be your total profit loss, but we're going to subtract how much you had to pay yourself and how much you had to pay in taxes and also your contributions to your IRA. And then whatever's left, we're going to multiply that business profit, that pure business profit, by whatever percentage that you're comfortable with. And we're going to set that aside as a charitable donation for whatever charity you want to donate to at the end of the year. And if you want to change this to where you're not deducting your expenses, so you're paying yourself for your contributions, and you can do that too. You know, you just find, let's see, this is the red, owner's draws the red one, so you would just delete this red number here, and that would make it a number based off of before you take out your own money. I think it's easier to pay yourself first because you have bills to pay and stuff. So there's that. Near IRA contribution, there's a maximum amount that you're allowed to put into an IRA. And right now, as of 2026, you can put $7,500 into an IRA. So for the whole year, you can only deduct this much from your income. So if you start getting over this amount, it's no longer going to be tax deductible. So you just kind of want to leave it. You don't want to really exceed that. But this tracks how much you've put in so far, so that when you start getting closer to this, you know, okay, I'm going to start losing tax benefit. It's not going to be able to be removed. So, you know, you want to max it out if you can, but not everybody can do that anyway. So that's what that is. Now, moving over here to our expense tracker in general, this is just how we break down our expenses. It's kind of the same as the other stuff here. We have marketing and advertising. So we'll just start entering some expenses. So this one's for marketing. So let's say that we're just going to throw some wild dates out here. On the 6th, 5/6, we had paid Instagram, or we'll say Pinterest. Pinterest, $150 for marketing. We'll say Pinterest just ads, and that's going to be a marketing expense. So now we can see up here that we paid $150 in marketing and advertising. Now shipping expenses, same thing. It's going to be the sum if shipping. Shipping matches the shipping here in this little quotation marks. So we'll say that in December, on the 13th, it costs us, we paid the post office, we'll say USPS. We had to ship that big order that somebody sent us, and it was $100, which might be more or less, who knows. But that was our shipping. So the shipping, and now you can see that, you know, it cost the shipping, and it also added to the expenses here. It's adding to the expenses here. Apparently we didn't make any money in May. We just spent a bunch of money on advertisements because we were desperate. All right, meals and entertainment. I have this section, but I don't hardly ever use it because the rules around it are really weird. You're going to want to look it up. Depending on what your business is, it may be more or less valid, but there are a lot of rules around what you're allowed to deduct for meals and entertainment. So if you're doing that, look up the rules and see if you qualify. But basically, you would just write in the expense and meals and entertainment, and it would get calculated here. Now, office and studio supplies. You can separate these if you want to, but let's see if it says office and studio supplies. So we'll say that in October on the 6th, we had to go to Office Max, and we had to get $50 in office supplies. So this will be office and studio supplies. So now you can see that we spent $50 on office and studio supplies. Retail, this is like if you're going to resell something. So like maybe you bought something on Fair and you're going to be offering it as a retail sale. This is a section for that. Web services. This could be your like I count my Shopify yearly fee as a Shopify fee so that it lets me know exactly how much I'm paying per sale on Shopify, but it could be something like your Google Suite, your Google Business Suite, or something like that. You know, if you have cloud service or any kinds of services that you need online that aren't part of your selling fees in general down here where you want to track what platforms are charging you to use them, that could be a web service. Professional services, if you need a lawyer, you know, anything like that, you could expense that as professional services. Repairs and maintenance. For me, I have to maintain my kiln, so if I have to get new kiln elements or do any kind of maintenance like that on my equipment, it will go under repairs and maintenance. This could look different for you depending on what your business and your process is. Sales tax. When you pay sales tax, so oops, we paid sales tax here, but we never said we did. So let's say that we made that payment on the 4th. So, oopsies. Sometimes if you copy and paste something and it makes the format weird, you can just click something normal and format painter it. So let's say that on the 1st of April, we diligently paid the Texas Comptroller our sales tax. Oops, that's all caps. Sales tax Q1, and we paid, you know, that's going to be sales tax. So your sales tax can be deducted from your federal income. It's an expense, so that's why we are going to track that, and it will be deductible down here because it's paid to the state, and therefore it comes out of your income, and it's not federally, it lowers your federal taxable income a little bit. Supplies and materials, of course, we're going to need some supplies and materials, so let's just say that on July 1st, we went to the art store, you can call it whatever you want, and we spent $75 on art supplies, and that's going to be supplies and materials. Now, supplies and materials is different than office supplies because these are the supplies that you're going to be using to actually create your work. So if you're a ceramic artist, it's your clay. If you're a painter, it's your paint. Office and studio supplies are things like printer paper and pencils, if you're not, you know, things like that. Things that are just kind of separate from your process but part of running your business. Whereas these are more like things that you're going to need to make the thing that you're making. Subscriptions, we know what subscriptions are. If you're using a subscription, which, you know, like not QuickBooks if you're using this, but that would be an example of a subscription. There are 100 billion kinds of subscriptions, Photoshop, Adobe Suite, Canva, whatever. You could be subscribed to a billion things for your business. If they are directly related to your business and are a valid business expense, then you can include them here as your subscriptions. Refunds. Sometimes you're going to have to refund people. Now, if you're doing refunds, what you do is you keep the income. So let's say that this person here that we sold this mug to on Etsy, they wanted a refund. We don't delete this. What we do is we go in here and we say, let's say 10/5, like for a few days after the sale. Oops, not 10. We'll say a few days after the sale, they wanted a refund. So we'll say this was with Etsy. We full refund them. Refund. We want to expense this off because you don't want to get messy. You want to know how much you've refunded and it doesn't take away from the fact that you made that sale, but we are expensing it out because we did give them a refund here. So now that's going to show up as an expense for refunds on that sale. Credit card interest. I hope you're not paying any credit card interest, but it is something that you can, put on your expense sheet. If you're paying credit card interest on a business credit card, you can take the total amount of interest that you paid for the month and write that in as an expense on your sheet. Gas and vehicle. If you're tracking itemized gas and all that stuff, you can put it here for shows. If you're just tracking mileage, I don't have a tracker for that, but there's lots of tracker apps, and that's a different system. So you might not need this if you're just going to track mileage. Damages. For me, sometimes someone will be like, hey, I broke my thing, and I'll be like, okay, I can send you a replacement. Just very situational. I don't always do that. But if I do that, I have to account for the loss of the item that I'm losing because I am sending them a replacement. So I will take, and let's say I had to send someone in December on the 5th. I had to send Sally a $40 replacement mug, and we'll call that damages because the original one was damaged and we are losing a replacement to this lady named Sally Shoebucks. So that's who we sent this replacement to, and we're expensing that mug that we lost as damages. Booth space. If you're going to be showing at an art show, you want to account for what you're spending on your booth. Etsy fees. You want to go into your Etsy account and look at your documents for the month at the beginning of each month and look at the last month, and then just put in all of your Etsy fees and expenses at once. Trying to do it every single transaction will make you crazy. We kind of just did a random one, but that is probably the best way to do it. Make sure that when you're calculating your Etsy fees for the whole month, that you're taking your shipping that you paid to Etsy and calling it shipping, because it's not technically an Etsy fee. You would have had to pay that no matter where you sold, so calculate that as shipping. I put Etsy ads, like when they do the offsite ads or any ads that you pay, it's separate on your Etsy statement, and I put that as marketing and advertising expenses personally. So Etsy fees are just the fees they charge for listings, for selling, transaction fees, and all that stuff. That's how I set it up. Shopify fees are going to be what you pay if you're paying for a yearly Shopify shop store. That big bill that you get or pay monthly, that's a Shopify fee. And every transaction fee that they charge you and take out of your transaction, you want to count that as a Shopify fee. Square, it's the same thing. Any money that Square takes from you from, transactions, if you have a Square subscription and that's where you host your website, you want to put that amount as a Square fee. PayPal fees, the same thing. Any fees you're paying. The reason you want to itemize these so well is because you want to know what platforms are charging you at the end of the day, including all their fees. Not just the Shopify has low transaction fees, but I don't know how much Shopify Premium is, but let's say at the beginning of the year, we have to do a Shopify Premium. Let's just say it's $100. It could be more or less, and that's our Shopify store fee, and we'll call that Shopify fees. Okay, so in that case, Shopify fees, we'll call it website. Messing stuff up here. There we go. Yeah, Shopify fees, income, website. So now we've actually paid more for Shopify, if that were the situation based off of what we've given it so far. What is this? Yeah. I don't know how that got weird. Sometimes things get weird, you just want to double check them. But now we've actually got 8% after we account for that. And that number can go down, up. But you want to track what fees these stores are charging you. By the end of the year, if you're doing a lot of sales on Etsy, you're going to look at this and be like, wow, I need to start my own website. Which there are pros and cons to Etsy. They do bring you a lot of traffic, but they also charge you a ton in fees compared to, running your own platform. These numbers that we put in here are crazy confusing because we just made stuff up. But I hope that this helps you understand how this workbook works so that you can come in here and confidently kind of adjust these dates to keep continuing using this workbook over time. I suggest that you look into every formula. I suggest that you save the blank template, just save it blank as backup, and then create a copy of it every time that you want to go in and work and edit it, because you want to keep that backup template with all the base formulas. And I'm going to fix everything that says IRA to say retirement so that that's not super confusing, so that you can be tracking it as retirement contributions. And then one more thing is, like, we entered these dates all kinds of crazy. So all we have to do is sort by oldest to newest, and it will sort these from January up to our most recent expenses. You can also sort by your different vendors, like where you've paid money to, and you can sort by the amounts that you spent, the description that you put in the box, and also you can select by category. So once this starts getting super full, these sorting options can be really helpful to find things. Also, same thing with this, we can sort it from oldest to newest, and then we can also sort by the outlet. So it just gives you these search filters here for every column. And it's really important that you're making sure that you're not having spelling errors and that you're typing, everything correctly, and then kind of just double checking that stuff is showing up. If something looks really off, you're going to have to backtrack it and see what's off about it and what went wrong. It's a very manual system. Will it save you money on subscriptions? Yes. Does it take a lot more work, and you have to pay attention to what you're doing and you have to stay on top of your finances? Yes. I think this is a good benefit though, because I know every time I spend something, I have to put it in here and look at it. I do it every day. I like, if I get a sale, I'm immediately updating everything instantly. That's how I am as a person. I understand that not everybody loves bookkeeping like that, and that not everybody's going to enjoy that kind of process. That is totally valid and fair. But if you do like bookkeeping and you think that you're the kind of person who could keep up with this kind of workbook, it can save you a lot of money in the long run, and I strongly encourage it. I'm going to have the link to purchase the blank template that we started with in this document on my website. It's going to be set for 2026, and I don't know that I'm going to go in and update it every year once I set up the template to be downloaded. So if you're buying it far in the future, the first thing you might have to do is go in and update all of your dates like I showed you on this video. It's not going to be super expensive because I want to help you guys make this, but also I want to respect the fact that I've put a lot of time into developing these formulas. I want to make it accessible, but I'm not really a document seller. I'm just a potter. So I hope you found this helpful. I hope that this can help you manage your business finances and save some money doing it. If this seems completely overwhelming to you and like you do not want to mess with all this formulas and typing stuff in, you definitely can consider that the value of paying a subscription for a bookkeeping service like QuickBooks might be worth it to you. It's up to each individual to decide what's right for them and their business, and I wish you the best of luck, and I hope to see you in the next video. Thank you.